Today, as I record this video, is 27th of July 2025. And today, somewhere in the afternoon, I received a comment on one of my YouTube videos. It was a question. And the question was, what are the benefits of selecting stocks based on their market capitalization? So I thought I will make a video to address this topic. I will make a video to put an end to this topic of market capitalization. Because if you read William O'Neill's book, there is a clear statement written which says any market capitalization is allowed. I don't remember the exact page number, but I can tell you if you read William O'Neill's book, How to Make Money in Stocks, fourth edition, you will find this statement in some chapter, some page. I don't remember where it is. But it clearly says any market capitalization is allowed. Now, let me elaborate on that. So, I went to ChatGPT to understand the definition of large cap, mid cap, small cap. You see, a lot of investors in India, they talk about large, mid, and small cap, but few of them know the specific definition of these categories. So, even I did not know the specific definition of these categories. So I realized that when I was talking to ChatGPT, the top 100 companies in India by market capitalization are termed as large cap as per the SEBI rules. After 100, you go from 101 to 250. Those 150 stocks are termed as mid cap, and anything below that is small cap. That is what I understood from my conversation with ChatGPT. This is what I currently understand. So that is market capitalization categorization, large, mid, and small cap. Now, in the system that I teach, the orange trading system that I teach, you have five kinds of analysis: liquidity analysis, comparative analysis, technical analysis, fundamental analysis, and market analysis. So the filters that I use are also coming from these five types of analysis. For example, if I go to my evergreen filter, see, I've made a bookmark here. By the way, you put this filter, I'll sort this by alphabetical order. You see this number, this is 50 now. This number last week was 72. Now suddenly it's become 50. So where did the remaining 22 stocks go? Well, this indicates that the market is becoming weaker, and that is proven by market conditions. See, currently the market is uptrend under pressure. Okay. Very recently, so we are at 27th July. So on 18th of July, the market went into uptrend under pressure from a confirmed uptrend. So here we see that the market conditions are becoming weaker. Confirmed uptrend means market is going up. Uptrend under pressure means market is falling from the top. Rally attempt means market is rising from the bottom, and confirmed downtrend means the market is falling. This is the most simplest definition of stock market behavior that I can give you. This applies to the overall stock market. Well, these values come from Nifty, but it's a very good representation of the overall stock market. So this indicates that the market is weakening. A far better indicator than that is this number. Suddenly, in 1 week, 22 stocks have vanished from this filter, which means what? They have probably broken their 50-day simple moving average. Let me explain. So if you look at this filter, by the way, I will come to that question about market capitalization. If you look at this filter, you see there is a filter here, price versus 50-day should be this, which means this basically means the price should be above the 50-day simple moving average. Now, these numbers, the price of the stock, the average volume, these don't change much. Even the ratings, the relative strength rating, group rank, they don't change by much. What changes is the price versus the 50-day simple moving average. If the price undercuts the 50-day, closes below the 50-day, the stock is out of our filter, right? So when you go from 72 stocks to 50 stocks in a week, those 22 stocks just vanished from your filter because of this filter. So you have to understand which filter is causing the problem. And the fact that this filter is very much active right now, it means that stocks overall are breaking their 50-day simple moving average. What does that mean? That means weakness. If stocks, the leading stocks are closing below their 50-day simple moving average, that indicates weakness in the market. So you really don't need to check Nifty or markets with market condition criteria to get a feel of the stock market. See, I am an old school guy. I get a feel of the market even before they change the condition from uptrend to uptrend under pressure. I already know a month ago that there is something wrong with this market. It is time to stay away from this market, or at least reduce your position size, or at least go in with small position size, or keep tighter stop losses in these kinds of market conditions. Correct? Coming back to the question, if you notice market cap, I have not used this filter at all, because what William O'Neill has said is any market capitalization is allowed. Now, let me help you understand this. I mentioned earlier that we do 5 kinds of analysis: liquidity analysis, comparative analysis, technical analysis, fundamental analysis, market analysis. When it comes to liquidity analysis, I have these filters. Price should be above 20, average rupee volume, average daily volume. These three are called liquidity filters because we are doing liquidity analysis. Okay. So these three filters cover the liquidity analysis portion. Okay. Then we do comparative analysis. These three filters are for comparative analysis. They take care of the comparative analysis department. Then you are comparing the price against 52-week high, 52-week low, and the previous day closing, and whether the price is above the 50-day and the 200-day here. So from here till here, this is technical analysis. This is the technical analysis department. Okay. So you are covering liquidity analysis, comparative analysis, technical analysis using liquidity, comparative, and technical filters. Then you have fundamental analysis. So you have sales growth, EPS growth quarterly. So this covers the fundamental analysis part. And market analysis I already discussed with you. So if we have set up our filters in such a way that each of the 5 departments is covered, if we have covered all the ground, what is the need to look at market capitalization? Okay, so let's assume that market capitalization is a problem. You are looking at a micro cap stock. Chances are very good that it will not meet this criteria, the liquidity criteria, or chances are good that the stock, since it is micro cap, it will have low market capitalization and it will not be a outperforming stock. An outperforming stock is a stock where money is coming into the stock. If money is coming into the stock, it is less likely to remain a small cap stock or a micro cap stock. It is likely to move up the ladder, right? So there is no need to use the market capitalization filter. These filters cover the whole ground. The analysis that we want to do in our system, these filters are more than enough to cover that ground. So in fact, I would say I would prefer a company with a smaller market capitalization, because that company has uh, it can go up faster. If you have a large cap company coming into this filter, chances are it will move up slower because large cap stocks are less volatile. So the moral of the story is this filter will give you stocks that are most likely to go up, and it will also give you stocks that are most likely to go up in the shortest period of time, right? Because we are using logic here. We are not using market capitalization here. I hope I have been able to address the question. Thank you so much.